Hi, Amy here. Today I'm going to talk about the tax implications of earning virtual currency. As most of you are aware, the IRS back in 2014 published a whopping 6 pages of guidance on how the taxation of virtual currency is handled. Now, when we earn virtual currency, whether it be through mining or providing services to someone who pays you in virtual currency, the question becomes, how is this taxed? All of these tax questions come down to one basic question. How does the IRS regard virtual currency? And it's a real question. Is virtual currency foreign currency? Is it security? Is it stock? What is it exactly? And what the IRS has determined that it is property. In the first of its questions and answers in the 6 pages of guidance, the IRS answers the question very clearly. How is virtual currency treated for federal tax purposes? For federal tax purposes, virtual currency is treated as property. General tax principles applicable to property transactions apply to transactions using virtual currency. And for tax preparers, this last sentence really covers it all. General property principles apply. If only it really was that easy. When it comes to earning virtual currency, it's as if I earned, let's say, a Chevy truck. I did some work for somebody and they paid me with a Chevy truck. The question is, how do I report that as income? First, let's be clear. That is income, okay? You have to report it. Now, the fair market value of that Chevy truck on the date that you received it is the amount of income that you're going to declare. So that's the first thing, is the fair market value as of the date. One of the interesting things in the IRS's guidance is that they very specifically say that the income that you earn is the fair market value of the property, virtual currency, as of the date that you received it. It doesn't say time, it says date. Now this is interesting because, as we virtual currency holders know, the value of the currency can fluctuate pretty dramatically within a day, within an hour. So when the IRS says date, kind of begs a question, does that mean I get to pick the time? And I think the answer is going to be yes. The key to this is going to be to apply the methodology consistently. Now, of course, if we've received coin in a wallet, it's going to tell us the fair market value as of the time of receipt. But would we get to change that and pick a different time? Maybe I'd like to kind of, instead of using the value as of that moment, I'd rather do some kind of average of high and low, something like that. I think you'd get away with that, again, as long as you applied the methodology consistently. Now, let's talk about self-employment income. If you're tax savvy at all, you know that not all income is taxed the same. For example, qualified dividends are taxed at a better rate than ordinary dividends. Long-term capital gains are taxed at a better rate than short-term capital gains. So what kind of income is the earning of virtual currency? And the answer is it's self-employment income. The IRS is very clear in its 6 pages of guidance that this is self-employment income. Now, I don't think they had a choice, because you're earning property, you're earning income. It's obviously going to be treated as self-employment income. What does that mean to the taxpayer? It means that you're going to pay FICA tax, which is Social Security and Medicare tax, in addition to income tax on these earnings, and that comes to 15.3%. So let's talk for a minute about self-employment tax. If you have a W-2 job, you've probably noticed that you have money being withheld to pay for Social Security and Medicare. What you might not be aware of is that your employer is matching those amounts and sending both halves into the IRS. If you are self-employed or you have any self-employment income, that means that there's not an employer who is matching that FICA. So you have to pay both halves. And as I say, it comes to 15.3%. Now you're going to pay this on the net income, not the gross. Let's talk about what that means. So if you're earning virtual currency in some way, whether it be mining, again, or providing services to someone who is paying you in virtual currency, you're going to file a Schedule C with your 1040, unless you're an S Corp or something more exciting than sole proprietor. But you get to subtract your expenses. So just to play with numbers, let's say that you've earned $5,000 worth of virtual currency, but you had expenses. If you're a miner, you bought ASICs, you probably have a screaming electric bill, and you could probably get away with deducting the extra electricity that you paid for. A note on that, you'd want to be able to show, this is what my electric bill normally is, this is what my electric bill was this month because I was mining, so you're going to take the difference I think would be a good sell to the IRS. So you subtract those expenses. You might even have a home office. Subtract those expenses on the Schedule C. You're going to pay the FICA tax and the income tax on the net proceeds. So it's going to be gross minus expenses equals net. That net, 15.3% for FICA, 10%, 15%, whatever your tax rate is for federal tax. And that's going to be the tax that you'll pay on your self-employment virtual currency earnings. Don't forget that I have a book that can help you understand your virtual currency tax obligations. It's called Virtual Tax, The Taxation of Virtual Currency. It's available on Amazon and on Barnes & Noble. Now for the fine print, these are general tax principles. Talk to your tax preparer before applying any of these principles to your own tax return. I am not responsible for any tax return that I have not prepared. Hey, if this presentation was helpful for you, hit like. If not, tell me what you didn't like so that I can do better. Share this with your friends who could use the information. Thanks for listening.